Hey everybody, it's Mike from Orderflows and welcome back to my channel. In today's video, I'll be talking about stopping volume, sort of just to follow up on the video that I did on stopping volume the other day, because there was a couple questions about it. So again, if you're enjoying my videos and you're learning from them, be sure to subscribe to the channel so you don't miss any new uploads. And again, feel free to leave your comments in the comment section below. Maybe what you've learned from this video. How you find my videos helpful, and more importantly, if there's any topics you'd like me to discuss in the future as well, please comment about it. Now, what I'm going to be using today is the Gocharting platform. We recently got our order flow indicators added to Gocharting, and one of the indicators that's very important to my own trading is the order flows ratios. Now, there's two ratios. There's a ratio bounds high, ratio bounds low. And ratio bounds high indicates price exhaustion. Ratio bounds low indicates stopping volume or price defense. And really, all the ratio is, it's just the order flow, right? It's just calculating a ratio on the order flow. And what we've found in our analysis, again, I used to do these calculations in my head years ago before I even had any, my own software coming out. This is one of the big additions to it when I launched the Orderflows Trader years ago. And I would always look for areas where there would be heavy volume coming in near the high of a bar, right? Because why is that important? Well, that's important because that to me is volume that can potentially stop a move. So if we're at a high and I see heavy volume coming in, I know there's supply coming into the market. And if there's supply coming into the market, that can potentially stop a move from going higher, just as if there was strong bids coming in on a move to the downside, that would potentially stop a move from going lower. Okay. And how to use the ratios to see that is you're looking for a number between basically 0.7 and 0. So you can see right here on the euro currency. Now this is a euro currency. This is a 5-minute chart. This is just this morning. We came all the way up here to 106.46. And I can see there's heavy volume coming in up here. I can see I got the bearish ratio coming in. It's coming in at as 0.11. It's red. Now the difference between the Gocharting platform and the Ninja Trader platform with order flows is on Gocharting, it will only print the ratio if it's within the threshold. Okay, if it's a ratio bounds high or a ratio bounds low. That's why you don't see on Gocharting numbers above and below each bar, but you see them only on Gocharting if it has one that meets the threshold. So you can see here the 0.11. That's why you don't see any number up here, here, or here in these red candles, because they don't meet the threshold. You see here 0.61 more stopping volume. So let's just sort of take it back a little bit. Okay, so the market had been going up and I see a 0.11. I see a bearish ratio bounds low. How do I know it's a ratio bounds low? Is because it's between 0.7 and 0.01. Okay, if it was say 146.2, then I know it's a ratio bounds high because that's above 30. And a ratio bounds low again means price defense, stopping volume. But again, where do you want to see stopping volume? You want to see stopping volume after a move. Okay, because here people say, well, isn't this stopping volume 0.69? Well, it's not making a move, right? There's no move to stop here. If anything, maybe it's acting as support, but the whole point of stopping volume is to stop a move. That's hence the term stop, right? Volume, right? It's volume that's coming in to stop a move. So you're going to be looking for them coming in at swing highs to stop moves up, or at swing lows to stop moves down. Okay, in this case, again, we had gone up, 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 up. Now there's stopping volume coming in. We come up here, we do make a new high by what? 1 tick here. Okay, then on the move down, we're starting to see supply also come in here with the 0.61. I mean, this one, it's nice to see this supply coming in here with the 0.61, But up here, it's very obvious, right? And then you see the point of control right up here at the top. This bar, it's just sort of poked up here, even left a tail. That's what this little box is around here, around these two zeros. But really the whole point of stopping volume is to stop a move from going higher or lower, okay? So again, it's not that you just see one anywhere and it's looking to, take a trade. You want to find them at swing highs and swing lows. And again, stopping volume, it's not a standalone indicator in the sense of it's going to say stopping volume. It's a ratio, okay? And what it means when the ratio is between 0.7 and 0.01, it indicates a ratio bounds low, which is stopping volume right here, right? You want a move to stop. Now let's take a look at another example, okay? So this is EMini's yesterday, okay? And here is a 0.65, right? Point of control on the bottom of the bar. I know that there's some decent volume. I could just see here, again, this is an EMini 5-minute chart. I can see at 1.2 thousand contracts traded on the bid here, even 892 on the offer. I can see heavy volume coming in here. Now, is this stopping volume? Well, that's what I talk about when talking about where are we. This is an area that we have been trading. This is at 130, okay? Since basically 1145, more or less, we had been trading around that area. So it's not really a move that you're looking for the market to stop. I mean, if anything, maybe it's supportive buying, but really, if I was looking at this as being stopping volume, instead of coming in here at 65 and a quarter, maybe the market was trading in here and then dipped down to, 60 and then rallied back up. Okay. So, even though I have this bullish prominent point of control, a lot of things going on in this bar, okay, if I'm going to say it's stopping volume, I want to see what's going to happen if we break through that, right? And we break through and we sell down. Now, there is some volume coming in here again. The next time we trade down here, 1.9K, 1.8K, even 754 contracts trade just below it. But again, it's just one of those things where it's not necessarily stopping volume when it's coming in an area of sideways activity. Right? If you're looking for price exhaustion, right? Same thing. If you're looking for price exhaustion, you want a move to happen. You want prices and traders to be exhausted, just as if they're stopping volume. You want a move to happen and traders step in and say, you know what? We're not going to let this price go any lower or any higher and defend it. All right. So just to wrap it all up, it's people, they get attracted to order flow because they think it's going to give them every single turn in the market. It's not. Markets don't exist for people to read the order flow and trade it, or read price action and trade it. They exist for a purpose, right? For people to transfer risk, farmers or whoever, to another party and get paid in a sense. Now, with the order flow, right, most of the time you see the order flow, it's just normal market activity, okay? But that's where the tools of the order flows trader come in to point out certain things to you that, hey, maybe there is stopping volume here, right? Maybe there's price exhaustion here, or, maybe there's volume that matters coming in at a certain level, all sort of things like that, right? Because it's one of those things. It's like watching soccer. Soccer is a very boring game to watch for the most part, right? 90 minutes, just kids kicking balls around, okay? But it's just that moment of brilliance, right? And it lasts maybe 30, 45 seconds, pass, that is just so beautiful to watch, and then a goal is scored. And the market is the same thing, right? It's a lot of boring activity, and then you just see that moment, something flashes on your screen where somebody just gave it away, gave away their intention of what they're doing in the market, and then the market makes that move. So I'm going to wrap up this video. Again, this is on the Gocharting platform. My order flow trader indicators are available on there. And you know what? If you're interested, I did create a trading course based on the Gocharting platform. I'll put the link in the description below. So thanks for watching this, everyone, and I'll catch you guys on the next video. Bye-bye.